Good morning from Cornell University in freezing Ithaca. The university is closed this morning and we have 10 inches of snow. The university will open this afternoon, but this morning we are very glad that the eCornell team continued with the spirit of Cornell and opened the webinar. So thank you very much. On behalf of the Cañizares Center for Emerging Markets and eCornell, welcome to the webinar, The Digital Currency Revolution, CBDCs, Crypto and the Future of Finance, a book that we have just launched, and we have here, all of us, the four authors of the book, Mark Mobius, Sharbari Pandit, John Ninia, and myself. My name is Lourdes Casanova, and I am the Gail and Rob Cañizares Director of the Cañizares Center for Emerging Markets. The term central bank digital currencies refers to a digital form of a country's official currency that is issued by the central bank. It's essentially a digital representation of a nation's fiat currency. According to the Atlantic Council CBDC tracker, as of January 2026, there are 49 CBDC pilot projects around the world. 3 countries, Nigeria, Bahamas, and Jamaica, have fully launched a digital currency. This launch is extremely complex with plenty of technological challenges, and the number of 3 continues to be 3 for quite a while. These 3 countries have linked their own currency, and we know the ups and downs of the eNaira, for instance, and these ups and downs were after the launch of eNaira. So these 3 countries link the digital currency to their own currency. But then Zimbabwe launched a digital currency linked to the dollar, and we know how much the dollar has appreciated in the last months. China, in February 22, launched a pilot with the sports participants in the Winter Games in February 2022. As a few days ago, has launched something that no one else has launched, and is paying interest to the digital balances of the yuan in the users' wallets, the first in the world. According to a recent Forbes article, let's remember that China is still in a pilot phase, the digital yuan has already processed 3.48 billion transactions, with a total value of 16.7 trillion yuan, about $2.38 trillion. So now, because of the interest-bearing accounts, the digital yuan can be used for retail payments and also for saving accounts. So why is that? Why all these things are happening? So for two reasons. One, obvious, the technology is there and we can launch crypto, stable coins, and central bank digital currencies. So the technology makes this possible. And in fact, the current system makes quite difficult international transactions. So yes, there is a problem. There was a European Union report that said a solution in search of a problem. So why that? So yes, there is a problem in the West. International transactions still today are not easy. And in emerging markets, there is a social need. Why? Because bankarization is low, credit card penetration not very high, and definitely the governments want to widen the use of the finance, want to have more people accessing small loans. Okay, so which type of world we are going to have? Are we going to have a world in which we'll have central bank digital currencies, cryptos, and stable coins? Remains to be seen, and we have here today Mark, Sharbari, and John, who will be with me discussing this subject. So we have Mark Mobius, who is the chairman of Mobius Emerging Opportunities Fund, John Ninia, who is the co-founder of Mobius Investments, and Sharbari Pandit, who is management consultant in McKinsey and Company. So I'm going to start, Mark, with you. Why the book and why now?
Thank you very, very much. I think the whole story of this book really starts with our excitement about what's happening in the digital world, because the entire world is moving towards the digital types of payments, digital types of coin, digital types of currencies. And of course, the most interesting thing we found when we did the research for this book was that almost without exception, all of the central banks around the world were researching central bank digital currencies. Of course, they were trying to catch up with what was happening on the ground, because they realized that with cryptocurrency, with Bitcoin and other instruments like that, they may be left behind, because there may be a lot of transactions taking place without their knowledge and without their control. So a big battle, you might say, is emerging between central banks and everyone else who wants to have more convenient payment terms, more convenient transfer of payments. Now, of course, as we've seen in the book and the experience we've had in China, the Chinese have done a pretty good job in enabling digital payments. And if you go to China today, you almost cannot use cash. You've got to use a digital form of payment. And that kind of idea is spreading around the world. But the exciting thing of the research we did on this book was the fact that there was so much going on in the world today in terms of a digitalization of currencies and economies, for that matter, payment methods, et cetera, And now you're going to have stable coin, which is another wrinkle. As you know, we found that in the United States, the US Congress decided to endorse stable coins instead of going for a central bank digital currency, which they rejected. So this is all outlined in the book, and I think it can be a very interesting read for anybody who's interested in their own finance and what's going to happen to their own money going forward. So I wish that everyone watching this today can pick up the book and give us your feedback after you've read it. We'd love to hear from you. Now I'd like to turn it over to Shawari. Shawari?
Yeah, no, thank you so much, Mark. We're so excited to share the launch of this book with all of you, and I think it comes at a particularly exciting time, because what you're starting to see is a sort of polarity around the world in approaches to in how they approach some of these digital currencies, central bank digital currencies, as well as cryptocurrency as an industry. So you have some countries such as the US, as Mark mentioned, they've gone ahead, they've introduced a framework for stable coins. So there is that kind of embrace of the crypto industry and encouragement for it to grow, whereas there is a rejection of central bank digital currencies. And then you have other countries such as China, you have the EU, you have India, who are all sort of really moving towards adopting a central bank digital currency. And they're very hesitant to recognize cryptocurrencies, to really encourage stable coins. And then you have a few bright spots such as Singapore and UAE, who have sort of decided to become hubs of innovation and sort of just sort of key areas within their geographies where such ecosystems may thrive. And so it's 2026 is gearing up, I think, to be a very exciting year in this space. But what we do see is definitely a recognition that this is now a separate asset class. Digital assets are something that you can't ignore. And as Mark said, something that's relevant possibly for all of us and how we also think of our personal finance. I'm going to redirect it back to Professor Lourdes.
Thank you, Sharbari. Okay, as Mark said, in countries, there are countries that all mobile payments are digital. So we see three models. An early launch actually of M-Pesa in Kenya was the result of a public-private partnership between a telco company, that was Vodafone, with the Central Bank of Kenya. Then we have, and the M-Pesa was launched, and the M-Pesa continues to be widely used, mainly in Kenya and in East Africa. A consortium of private public, so the Central Bank of Brazil, launched Pix, the mobile payment, and was a consortium between the state-owned banks, Banco do Brasil and Caixa Federal, and private banks. And Pix has taken Brazil payments by a storm, and everybody's using it. And then we have another model that is private-based. Strangely enough, in China, the mobile payments are completely dominated by WeChat Pay and Alipay, but also have seen a similar situation, for instance, in Nigeria, where fintech companies dominate the space. So, as Sharbari said, John, what do you think? We'll see a combination of mobile payments in the retail sector, stable coins and cash in the retail sector, and digital currency for wholesale and international cross-border transactions. How do you see this coming? What was the discussion? Was one of the discussions in the book?
Well, I think early on, you're going to see a lot of competition between the public and private sector. You'll also see a lot of collaboration. I think it really depends on the country that you're looking at. And as you mentioned, there's plenty of private companies that are flourishing. A lot of these private companies, though, like in Brazil, they're operating in a private capacity, but they're using Pix to facilitate the transactions, which is a public creation by the government. Now, I tend to think that the public sector is usually quite inefficient when they get involved in different matters, and that the private sector is usually the best to rely on. But I do think at the end of the day, you will see a combination. And the reason is because the government, which is issuing these currencies, they can give stimulus and different payments, social payments to citizens, and they might mandate that you use their platform to accept these payments. This could be in the form of Social Security or whatever it might be. And as we're looking at this transition from just digital money in your bank to actual programmable money, where central banks can now say, oh, you must spend this money on education. Or let's say in the US, with the example for SNAP benefits, they could say you must spend this money on food. I think you're going to see a lot more pressure for people to adopt socially implemented CBDC payment platforms. But personally, I do think that the best sort of combination is a mixture of both public and private within one entity. So this could be in the form of digital wallets that are also FDIC insured, for example. That way, the private sector is really the one that's getting involved and helping to facilitate the payments, but the central bank and the government is stepping in and saying, and is providing credibility and trust to the money that's sitting in these digital wallets.
So this is a moving space, and but it seems from the data that we have is that as a unit of storage of savings, crypto is used a lot in this country and in Europe. However, as a use of for transactions, crypto is used in countries like Argentina or Nigeria. So how do you see this evolving in between crypto and stable coins? So, and for me, another question is, will governments give up the control of the money if stable coins and crypto are part of the private sector?
I don't think that the government will ever give up on this. I think that this is something that governments around the world are scared of, which is why now they're scrambling to issue these CBDC alternatives to crypto. And as you mentioned, people in emerging markets, they've been holding their savings in digital currencies such as Bitcoin to hedge against inflation. But even if you look outside of emerging markets, I mean, if you consider any currency in the world, it has lost value to Bitcoin over the scale of 2 years plus. I mean, if you can look at shorter time frames and say, yes, Bitcoin has dipped from its all-time high, which is true. But if you zoom out 2 years, 5 years, 10 years, every single currency, including gold, has lost value compared to Bitcoin, which is interesting to think about because then one could make the argument that actually you're better off holding your money in Bitcoin than in US dollars. But I wouldn't go as far to say that due to volatility and other reasons. But I think that this shows that not even the US dollar is completely safe from threats such as Bitcoin. And the reason is because these currencies like Bitcoin and gold, they have a fixed supply. And with the dollar, you're just at the will of the printing machine. So there's this constant battle between inflation and the value of hard assets, which can't be modified. And while emerging markets have typically been known to struggle more with inflation and other fiscal policy measures, we're now starting to see these cracks in developed countries, including the US, with the way that inflation has been going these past few years.
Thank you, John. I'll get back to you, Mark. In
Yes.
many currencies in history, and often currencies, the most successful one, is linked to the country in power. Which ones have been more successful and why?
Well, actually, as you know, the US dollar has dominated for quite a long time, but don't forget, things don't last forever. As you know, the British pound sterling used to be the dominant currency, and that fell by the wayside, and the US dollar took over. And now we're really at a turning point in many ways, because as John mentioned, you have things like Bitcoin, which has outperformed in value the US dollar. So there's a new generation of people who are beginning to question the strength of central banks and what they can do. And in fact, there are more and more people who say central banks have been harmful to currency value by printing and printing without having a stable backup like gold or silver. So we're really now at a big turning point. And as you know, the Chinese and other BRIC countries, the BRIC, Brazil, Russia, India, and China, they're getting together and saying, hey, why should we be following the US in payments? Why should we not create our own payment system with our own currency? And they're moving in that direction, which could threaten the dominance of the US dollar. So we're in a very, very exciting time, and which is why I believe our book is very timely.
Yeah. Okay, let's remember that major commodities like oil or coffee continue to be priced in dollars, in US dollars, because today the currency of choice continues to be the power is within this country, and the US dollar continues to be extremely powerful. So, Sharbari, you looked within the book to the Genius Act. So, still, if we look at volumes, stable coins, and Genius Act pretends to regulate the stable coins mainly, stable coins are pale in comparison with the Bitcoins of this world that are much more volume. So how do you see this evolving? Are we going to see stable coins going up and then cryptos that have been so volatile going down? How do you see that?
Yeah, I mean, I think that's a great question. So I'll kind of answer that in two parts, right? The first is a little bit about the Genius Act. I think it was one of the more exciting things that we kind of got to cover because there was so much regulatory activity in the first half of 2025, and so it was exciting that we were able to include that in our book. So the Genius Act scope is limited to stable coins largely, and I think that it is a great sort of pioneering framework because given the scale across the world of investments in this space, recognizing and regulating it is something that is sort of in the right direction. I think it was visionary in that sense. It was also something that the crypto industry in the US very much wanted. So it wasn't sort of regulating an industry that didn't want the government to interfere. It was very much an industry that wanted to go from sort of 100 to 1,000 with the government support. And I think it was also it was also a prudent thing to do because of the amount of, as you mentioned, the volumes that are flowing through that industry. So in terms of, if I would say welfare or public benefit point of view as well, I think it made a lot of sense. So the Genius Act does, some of the sort of more basic things that a framework needs to do to regulate an industry, right? It brings in a sort of clear definition of which digital assets are included. It brings in a basic set of rules within which larger companies or stable coins can operate and set themselves up. It starts bringing in regulators so that people have clarity on what is allowed and what's not allowed. Now, why do I mention this? It's because I think that, to your question, Bitcoin has had a head start over other currencies or other stable coins in this space. And the reason is that Bitcoin was one of the, maybe only for a very long time, digital asset that had regulatory clarity. So it was clear that Bitcoin was not going to be part of SEC's domain, and it was clear that it was not going to be the CFTC's domain. And that is why there was the confidence to invest as well, apart from other things that make it lucrative, as John has mentioned. Now you're finally giving stable coins that same kind of clarity, because before 2025, you had a lot of fear in the crypto industry and a level of sort of randomized targeting from the SEC and some other regulatory bodies. So you didn't know if you were going to be classified one way or the other. There wasn't a clear categorization of what kind of asset you were. And so that obviously is something that stops people from growing. Now that you kind of have the first steps towards that clarity, you have an encouragement for an industry to really invest in its own capabilities and its own growth. And you have consumer confidence as well, because there is actually some sort of security and backing. And so I would anticipate that, the volumes would increase in this space, because now a whole bunch of consumers with a slightly lower risk appetite, but an interest in sort of starting a digital assets portfolio, now have a legitimate space in a way that they would for, equity and stocks and a whole bunch of other stuff. So yeah, I'm optimistic about this space.
Thank you very much, Sharvari. We are getting questions from the audience. Please continue to ask questions. So the first one from Ken, and I would say to John, what are the significant differences between central bank digital currency versus private forms of cryptocurrency? John, could you please elaborate, because you mentioned that earlier?
Sure. So a central bank digital currency is unique in that currently central banks issue currency through banks, through bills. These are directly issued by the central bank, which is a part of or connected to the government of the countries. And it's directly issued and it's directly accepted, usually for things such as tax payments, debts, things like that. Crypto, on the other hand, it really varies depending on what sort of cryptocurrency we're talking about here. But if we're talking about Bitcoin in this case, Bitcoin is not controlled or issued by any singular entity. There is no central control or power over Bitcoin. So it's fully decentralized. When transactions are made and processed, there's a group of people that work together to validate the authenticity of these transactions. So that's really what separates it from a centralized power that can have checks over the authenticity and legitimacy of transactions. But there's other cryptocurrencies that are not as decentralized in nature, or not decentralized at all. So it really depends what cryptocurrency you're looking into.
Thank you, John. And this one will go to Mark. Mark, you are a legendary investor in emerging markets. Some they say that you created the asset class. So Gerald is asking for some investment advice. He says two questions. There are so many different cryptocurrencies. What factors do governments look at to select a crypto? And the second, is there going to be a dominance? Please mention a cryptocurrency that may dominate. Mark, please.
Well, thank you very much for that nice compliment. First of all, you must remember that cryptocurrencies like Bitcoin and others are not being adopted by the central banks. Central banks, in fact, want to eliminate those if they can. They want to dominate with their own currency, their own digital currency, or their own. I hate to use cryptocurrency in the sense of central banks, so it's really digital currencies, but you could call it a type of central bank cryptocurrency. So now, if I had to recommend a cryptocurrency, I would favor the currencies that are backed by dollars, gold, or silver. That would be stable coins. The trouble with that, and the danger, of course, is that many of these stable coins have been found not to be keeping the assets they should be keeping to back up their coins. So you've got to be careful with that. But in addition to that, of course, Bitcoin is shown to be quite a very, very good currency in the sense that so many people are using it. It's a very liquid market now, and it seems to be stable in the sense that there is a fixed way of identifying where they are, et cetera, et cetera. Of course, some people have lost their wallets and have had to lose their money. But other than that, I think that's probably the best alternative if you're interested in a cryptocurrency. I would say that in addition to overriding all of this, I would recommend people to get into a stable coin backed by gold. And of course, then you have to have a very trusty holder of this gold, which is audited on a regular basis. So that's my take on that situation.
Thank you, Mark. I also would like to remind the audience that El Salvador was the first and so far only country to adopt crypto. El Salvador was dollarized, let me remind you, so was one of the countries in the world, along with Panama and Ecuador, that used the US dollar as the fiat currency. So the president wanted to introduce some changes and adopted crypto as a fiat currency for El Salvador, an alternative to the cash that was US dollar. However, the e-wallet, as Mark said, people have lost their e-wallet. They forgot the password that was under another password, and lost all the money. They couldn't access their own wallet. So then El Salvador government backed the e-wallets in cryptos. So it was a de facto both a crypto and also a central bank digital currency because the government allowed you to access to your e-wallet and guarantee those e-wallets, which is interesting, very interesting experiment. The IMF questioned that and remains to be seen where this experiment goes, but very interesting experiment. We go now to another question from Majid. What is your view more on the technological side? And please pick up the answer, Mark, John, or Sharbari. What is your view on central banks' readiness to launch retail CBDCs, particularly regarding operational and technological challenges and risks? Who wants to answer the question? Whoever.
I'll pass that on to Shawari.
Yeah, I think your question hits the nail on the spot, right, as they say. So one of the biggest challenges with rolling out a retail CBDC has been operational and design. There are two reasons for it. The first is, unlike other forms of currency that we've seen before, which are the same everywhere in the world, a $10 note essentially works in the same way that a yuan note or a rupee note might work in their own respective countries. That is not the case with central bank digital currencies. There is this new capability to design it in a way that is most suited to the priorities and use cases of every different country. So for for the digital euro, of course, for example, they had to announce a delay and sort of trouble in managing a scalable solution that also provides privacy strongholds and thresholds that are in line with the rest of the EU framework and expectations. Because privacy and sovereignty over money is something that is a massive sort of use case and priority for the digital euro. However, in other parts of the world, the focus is on financial inclusion. And in that instance, you see slower adoption. You see typical challenges as you would in rolling out any technology at a large scale. And so in places such as Nigeria, for example, there was lower adoption. And even in China, we saw actually not as much organic adoption because of the fact that you already had digital payment options that were already extremely sort of well penetrated in those ecosystems. And so for a retail user, the question really was, but if I already have WeChat Pay or Alibaba Pay, what is new about this? Why would I take that extra step to sort of transact in this money, right? And I think that continues to be one of the challenges. I think what is going to be interesting, though, as John touched upon earlier today, is programmable currency. I think that governments are going to be able to really draw on a lot of retail users if they are able to provide smart contract based or programmable currency in a manner that, it can be, that's how you dole out then subsidies, for example. And so, for example, in India, you've seen pilots where people have received subsidies to buy agricultural products, which can only be used in certain instances to buy seeds, grain, etc. But that currency will not be used anywhere. It cannot be used elsewhere. So those are places where you will sort of see a real uptake and adoption for certain use cases. But scaling, as with any other technology, remains a challenge. Scaling for large populations in an instance where you are customizing technology is an additional challenge. And so that's something that we see is slowing down CBDC pilots around the world.
And I would like to add cybersecurity. In a world where cybersecurity is a major challenge, imagine an attack, a cybersecurity attack in the country system. You have your dollars at home, and that can be used anywhere. However, if the system is attacked, imagine the disaster for the country. And another question is interoperability. Every country is using their own technology. So again, a solution in search of a problem. So there is a problem with international transactions, but we may face similar situations, and that's why there are a number of projects and Bridge and others to solve the problem of interoperability. How do you transact between the digital euro and the eNaira in Nigeria? How do you do that? What is the value of each? So how technology and also value, definitely, without going through the dollar. Till now, most of international transactions are going through the dollar, through a currency that is quite stable or very stable, and also that everybody values and everybody needs for international trade. So thank you very much. And then while we wait for the next questions, I wanted to, Sharbari, maybe you mentioned the UAE. So could you please tell us more about what is happening in the UAE that wants to be a big hub for currencies?
Yeah, I think the UAE has been a very interesting story to follow for me because much like their ability to be sort of quite visionary and early adopters of a lot of newer trends, I think the UAE has been sort of very smart about how they've started positioning themselves in the global payments ecosystem. So there are a few things I think that really work for UAE. One, their ability to just sort of attract a lot of talent and give them space and freedom to really build. And so I think in that sense, it has started becoming a regional hub for a lot of people who are in the space of cryptocurrencies, stable coins, private currencies, to just find a base within Asia or Middle East and start working out of there. I think the second is their ability to start providing those regulatory incentives. So you'll see that when it comes to real estate tokens, so REITs, for example, they've worked with EMAR to start pioneering, the ability to offer real estate tokens as an investment. They have introduced a whole set of regulators and rules that very similar to the US in that sense, right? And so VARA being like one of them, where they're not just kind of looking at it as digital currencies, but as a slightly broader ecosystem that is based on sort of blockchain or technology forward payment systems. So that's the second. And the third pillar, I think, is that they have really started building those bilateral or cross-border payment agreements, which are very path-breaking, right? As even if they are not grabbing headlines right now. Now, why do I say that? Because of the problem that you highlighted just before we started addressing this question. In the sense that right now there's a lot of interoperability which needs to be figured out. And UAE is starting through pilots with individual countries to do that. And if they're able to really crack that, then what you see is really a true alternative to the current global payments and financial order, because you're able to start bypassing SWIFT at a government level to start paying in terms of treaties, in terms of loans, and then at an individual level in terms of remittances, which again makes UAE a very exciting place to pioneer that because of the fact that they have a very massive expatriate population. And so, for example, with India, they are trying to see if through UPI, they're able to create like a bilateral payment and remittances corridor. Singapore is also starting to do something like that. So I think those are things which I would track very closely. And I think that the UAE will continue to sort of become a bigger and bigger hub for the cryptocurrency and the blockchain-based payments ecosystem.
Okay, this question from Gurpinder for John and Mark. You have been traveling the world, and I remember while we were working on the book, you would say, oh, this is working in Jamaica or it's not working, in India or in China. So Gurpinder is saying, how exactly is CBDC any different from current fiat currencies, considering that actually the currencies are already digital? So we have mentioned today in our discussion that, for instance, the success of WeChat Pay and Alipay makes that the introduction of the e-yuan for mobile payments, for retail mobile payments, is difficult. Also the same in Brazil, everybody's using PIX. Why to have a retail central bank digital currency while PIX is working, or other mobile payments? Or here we are using Google Pay, Apple Pay, Venmo for small transactions, Zelle, so many opportunities, and of course credit cards, Visa, MasterCard, American Express. So why to bother? So why is different, and how do you see this moving forward? How have you seen in your travels, when you stay for a month in India, how do you see this evolving, John and Mark? Mark, maybe you can go first.
Okay, yeah. I think the key word is control. If you look at central banks' digital currencies, the attraction for governments and for central banks is they have control of where the money goes, how it's spent. And that is a tremendous advantage, because you can then direct money to the type of payment that you want, or type of payment system you want to use. For example, in India, if you had a central bank currency of that nature, you could say, okay, only the rice farmers are going to get rice fertilizer. We're not going to waste it on wheat farmers. Or in the case of Brazil, you might say, we are not going to give any money for our school programs to fathers, but only mothers, because we know the mothers will look after the children in going to school. So that is really, I think, the key point for central bank digital currencies, which why they're so attractive for governments and central banks around the world. And what must remember, at the end of the day, governments can mandate that all government payments be made with their central bank digital currency, which could expand they use fairly rapidly. So those are this question. Of course, a lot of this is confronted with political opposition in various quarters. John, maybe you can add something to that.
Yes, it's true that right now I think all of us could go on our mobile and open up an app that we bank with and see digital money there, have the ability to spend it, transfer it, um, and whatnot. But I think the key difference with CBDC issuance is also not only, as Mark mentioned, control. I mean, I think that's the biggest aspect of it. But a feature of control is also getting away from banks holding on to this money and more so having these digital wallets holding this money. And these digital wallets are controlled and issued by the central bank and by the government. So it really gives the government more insight into how the money's being spent, where it's going, and also down the line, as Mark is mentioning with programmable money, giving the government the ability to actually limit what that money can and can't be spent on. So while currency is already digital, the key difference lies in the way in which we hold on to money and how we transact with other people. I think another key aspect too would be with domestic transfers, there's a lot of CBDC options that are just as good as cash. Um, and again, I know that there is alternatives that are already out there in the private sector. Um, but the government and the central bank wants more control within these transactions. From a consumer point of view, this can be great. If you're a small vendor, like Mark and I were in Brazil, walking down Copacabana, and you could buy a caipirinha with Pix on the street. And you transfer someone money, they get the money, and there's no fees involved. And merchants love it because typically they were accepting Visa or MasterCard and they were paying maybe 2-3% on the transaction fee plus a fee on top of that. So governments see this and they provide an alternative which helps the consumer and it also helps them because they get more insight into how money is moving and how the state of the economy looks. And then they can actually enact fiscal policies based on gathering all of that data.
Yeah. And remittances, let's remember how important are remittances for Mexico, for Philippines, for El Salvador, countries with huge immigration. And definitely right now, remittances are very expensive. Western Union still dominates the space and also insecure because sometimes you give the money to the bus driver or to the stewardess who is traveling to your country. What happens if the money does not arrive to your family? So after all the effort that you are doing, maids, bus drivers, taxi drivers, sending the money back home. So remittances is definitely very, very important. And I would say another aspect, as we have seen in China, Alipay dominates consumer finance because those companies that dominate mobile payments have so much information about their clients, know your customers, such a very expensive endeavor. So mobile payment companies know how much citizens spend, and they can give cheaper consumer loans. And at some point, Alipay and WeChat Pay, Alipay mainly dominated as much as 60% of the consumer finance in China. So the government obliged Alipay to put the data that they had on their consumers in a separate company that all banks could dominate. So it's not only CBDCs, but also mobile payment companies that can steal part of the finance to the banks, part of some of the very important activities of the banks can be transferred. Technology allows to transfer to mobile payments. So we see telcos, we see central bank telcos, and I mentioned M-Pesa. We see e-commerce companies. I mentioned Alipay and WeChat Pay, but we have Mercado Libre, Mercado Pago in Latin America. We have Jumia Pay in Africa. So who do you think that will dominate the space? Are we going into telcos, Vodafone, M-Pesa, Kenya, mobile payments, Alipay, WeChat Pay, and other fintechs, or will be banks that will move, as it happens in the case of Brazil, that is a consortium of banks dominated with central bank digital currency, who will dominate the space, who will move into this, into the consumer finance, into moving like banks, e-commerce, mobile payments, fintechs, or more central banks. Who is going to dominate? What do you think? It's an open question to all of you. We don't know. So we are speculating based on the information we have today. Mark.
Well, I think you have to look at who the big players are now, and it's going to be a battle for survival. For example, credit card companies are enormous, and they want to grab a piece of this pie to survive, because if people are able to make payments so easily to when they buy a dinner or when they go to the supermarket without a credit card, that would be a big loss to the credit card companies. So I think they're going to be big players. Then I think you have to look at the big players in the internet generally, Google and the others like that, who will want to be engaged with this sort of thing. And don't forget the Chinese. The Chinese already are not only in China, but global. You know, you have payment systems that are being used here in Dubai, in Africa, and other parts of the world that are Chinese, like Alipay. On my phone, I have Alipay to use. I don't use it here in Dubai, but when I travel, sometimes I use it. So I think those will be the big players. I don't know, John, what do you think?
Yes, I agree with you. I think on a country by country basis, it will really depend what happens. Because in the US, you'll probably have a lot of lobbying going on behind the scenes to prevent something coming up and challenging the dominance of credit cards and other entities. While in a country like Brazil, as I mentioned, they probably want to get away from using Visa and MasterCard and implement something else. Actually, I believe Brazil does have an alternative to Visa and MasterCard, or that's already existing with card payments. So I think, yeah, it really depends on the country and the geography that we're looking at. But I think if I had to pick one winner, I think that telcos are in a very unique position because everybody has a cell phone and everybody has a cell phone number. And your cell phone number can sort of act as a wallet in this sense, which gives them a huge advantage. I mean, everybody already has an account. If you think about it like that, everyone's already signed up. So if you just implement some sort of infrastructure, which now this phone number can not only send and receive calls, send and receive messages, but now it can send and receive money. That's a massive game changer in many countries, not only emerging markets, but developed markets as well.
I agree with you, John. But the telcos have been very late comers. They have of course, they are the incumbents, and they have the privilege to wait and see what happens. And as you mentioned, of course, Google that is everywhere. Sarvari, what do you think? Telcos, e-commerce, by the way, e-commerce have been probably the most aggressive in the space. However, Amazon has not been entering the space, but. So as I mentioned, Mercado Libre in Latin America, Jumia in Africa, and of course, Alipay in China. So how do you see who will be? But telcos should be the natural, and to a certain extent banks, but banks have been reluctant. They are very profitable, so why to bother? And as you say, MasterCard, Visa, American Express. Sharbari, what do you think?
Yeah, I would actually not look at telcos as the incumbent. One, because I think that while the intellectual use case for them to move into the space and kind of just extend their existing sort of use case and account is very prominent. I actually haven't seen a massive sort of experiment at a scale happening with any of the major telcos. To me, incumbents actually are digital payment providers in most countries. And then in some countries, it's the banks which also provide digital payments. So if I were to look at it sort of almost anecdotally, right, what are people using today to make most of their payments in a country? And so in most countries, it is either their credit card, it's either their banking app. And then, of course, in countries like China, India, it is, the Alipays, the UPI, all of those of the world, right? those I think are in the best position, even if a central bank digital currency is offered, to just extend capabilities on their wallet and say, oh, we also now, by the way, take, e-yuan, e-rupee, like all of those things, because they actually have daily or monthly active users. And the users already know how to use their tool. And so all they have to do is offer a functionality. To give you an example, I thought it was very interesting that China started offering interest now on holding e-yuan. But I don't necessarily need to open a new bank account for it. That's the beauty of the CBDC. So if Alipay now just decides to extend its functionalities to allow me to hold e-yuan and to link to a bank, Alipay is still winning. So I would think of the incumbent as mostly the digital payment systems, and then in some countries the credit cards or the banks where people use their apps for making payments. Zelle, for example, is an example.
Yeah. So, but if we think, for instance, in Brazil is banks, or
Right.
Visum in my country of origin, in Spain, again, a consortium of banks getting together and saying, let's enter the space and let's facilitate this mobile payment. So remains to be seen. As the audience can see, we have different opinions, not only because there are different opinions, but because the space is moving so fast and so much. So very interesting to see, very interesting space. Will banks lose part of the banks? Always have always been there for centuries, for millennia. People who were lending money and storing money and making transactions and issuing debt. So how are banks and this will be the closing question, John, Mark, and Sarvari. How are banks into all this? Yes, Mark, you mentioned that credit cards stand to lose a lot, but what about banks? How do you see, again, banks always there. So what do you see, how do you see banks evolving into this new space? Mark?
I think the banks are running scared. I think they're wondering how this is going to affect their profitability. And I believe there's a lot of lobbying in the halls of power in politics by the banks to make sure that they keep control of the situation, because it could easily get away from them. Already we're seeing the multiplication of deposits in euro currency and other currencies, stable coins, etc. And so the banks are going to be very, very concerned about these developments and how it will impact their bottom line. So I think probably you'll see them pushing for legislation to control it, but it remains to be seen how this turns out. Don?
I completely agree. I was going to say the exact same thing. I think that banks are very scared. I think there'll be a lot of lobbying going on. The most efficient outcome may not be what happens, because banks need to protect themselves and protect their profitability. So even if there is a better CBDC alternative, if there's a better wallet, you may never see it, because banks will fight to stay alive, and they have practically all the money that they need, without exaggeration, to get this done. So, but that being said, I do think that banks will try to evolve and try to adapt, so that if the banks are continuing to evolve and adapt and provide better products for consumers, it also keeps people quiet from demanding solutions from their own government. So as long as the banks can keep consumers happy, the demand for such infrastructure and such changes may not arise.
Sarvari?
Yeah, I think in a similar vein, I do think though that today we sort of focused on retail CBDCs and retail digital currencies. An interesting and equally significant use case for central bank digital currencies is the wholesale part of it. And that's really where I think traditional banking is again threatened, because a large part of what a bank does is also be the intermediary between the central banks that release money, that set interest rates, etc., and the retail consumers. There is a world, hypothetically, where you can just remove the middleman or woman, and directly as a central bank consolidate that power as well as, you know, the ability to just directly trade retail money and make changes as you will. As John and Mark mentioned, it's highly unlikely to happen. There are also deeply entrenched payment systems around the world, which require banks to play the role that they do. But I do think that on a 20-year horizons, what banks do might actually shift, because the presence of a currency that allows interbank trading, especially across countries, that is real time, that skips a step, is too lucrative for somebody around the world is going to try this, and there is going to be a use case, and so, you know, we're going to see it happen, but I think on a longer horizon, and in a way that banks are part of that sort of process. I did see a question come up, if at all we want to take that.
I think because we are, so the really last question, because we are on time. Will the cost of managing the money be cheaper with cryptocurrencies or central bank digital currencies? And how would you issue credits and crypto look like versus bank issued? That's a very interesting, credit cards. Very quickly, we don't have much time. John, Mark, and Sarvari.
I think that's a very interesting question. But at the end of the day, banks will want to have control, as I mentioned, and although they may try to use some kind of stable coin, they will still want to have the control. John?
Yes, I agree. I think that banks will fight for control. Managing money with cryptocurrencies could pose as a cheaper alternative. There's already plenty of cryptocurrencies where you can process transactions for less than a tenth of a cent. But banks have the current infrastructure where they could step in and perhaps subsidize some of these transactions and make it more appealing for consumers.
Yeah, one of the use cases for CBDCs was that printing physical cash is expensive, logistics are expensive. CBDCs kind of reduce that. That said, we actually have a very fascinating chapter. I think it's chapter 4 and 5, where we actually go into detail for, you know, the energy needs and like a comparison from multiple perspectives in terms of sort of energy and cost of production for CBDCs, which, if you're curious, I would highly recommend you get the book and check that chapter out. But long story short, if you are able to scale CBDCs and manage sort of energy efficient processes, then yes, there is a very clear sort of cost differential there compared to current systems.
Thank you very much. And on this note, I wanted to thank the Cornell students at the Cañizares Center for Emerging Markets who worked very hard to make the book possible. Gabriel Carvalho, Avi Das, Abubakar Idris, Charlie Bernosa Moros, and the whole team, Caleb Kabuma, and many others who enthusiastically worked on this, on the research for the book. So very, very grateful. And I also wanted to thank the eCornell team that has been made possible, Chris, David, Steve, Reina, and all of you for making this keynote possible. The video will be available in very soon, also for those who could not attend it. And thank you, the audience, for joining us in this very freezing morning in Ithaca, New York, for this very important webinar in a very important topic that is evolving, where there is not always agreement on what will happen, but for sure will revolutionize significant parts of the global finance, how it works, and also how we transact, all of us across the world, citizens, companies, and international payments, especially in emerging markets where there is a need, because the current system does not work with currencies that have no value, with a banking system that is too expensive for a lot of the population, sometimes as much as 70% of the population. I hope you all found the discussion insightful and will continue to engage in this important topic that, as Sarvari said, please buy the book, and please, as Mark invited you all, contact us if you have any remarks, and we'll be happy to continue the discussion. Thank you all. And without the help, this book, we have been very important contribution, we hope, to this very important field. Thank you all.